Hello and welcome to Earnings Echo. We put together the most important information about Cloudflare. Let's just get straight into it. Give me the headline numbers and the guidance we're dealing with today.
Well, Q1 revenue came in at $639.8 million, which is up 34% year over year. And non-GAAP earnings per share hit $0.25.
Okay, and the forward guidance.
Right. So looking ahead, management is guiding full year 2026 revenue to somewhere between $2.805 billion and $2.813 billion.
Got it. And the market reaction?
Very strong. Post-earnings, the stock was hovering right around $225 a share, so that puts the market cap near, pretty massive $79.4 billion.
Wait, $79.4 billion on roughly $2.8 billion in forward revenue. I mean, a 34% top-line growth rate is solid, but we really need to break down the operations here.
Yeah, we do.
Because look, if a company is growing revenue by 34%, why on earth are they suddenly cutting 20% of their workforce? That's what, roughly 1,100 people getting let go?
Yeah, about 1,100 people. And Cloudflare is actually absorbing a $140 million to $150 million restructuring charge to do this.
Just to force those layoffs through?
Exactly. Well, management calls it forcing an agentic AI-first operating model. Basically, their internal AI usage just spiked 600% in 3 months.
Wow, 600%. So they're seeing that much efficiency on the inside.
Right. Massive coding and customer support efficiencies. They realized they just don't need the same headcount. But crucially, their quota-carrying sales capacity remains totally untouched.
So they aren't firing the people actually bringing in the cash.
No, just trimming operational fat. And at the same time, they added 1 million developers to their platform in Q1 alone.
1 million in 1 quarter. Doesn't that just crush their gross margins with all that free tier compute usage?
It does temporarily pressure the gross margins, yeah.
Yeah.
But getting all those developers into the ecosystem early is what vastly scales their long-term unit economics.
Right, which explains management's tone on the call. They sounded ruthless, but incredibly confident.
Yeah, they claim they're already fit, but need to get fitter.
Fitter to capitalize on hundreds of billions of monthly agentic AI requests. But let's test that reality against the valuation. Walk us through the reverse DCF here.
Sure. So for you listening, a reverse discounted cash flow model isn't an exact science, but it's a great indicator of what future growth the market has already priced into the current stock.
Right, working backward from that $225 share price.
Exactly. At $225, the math implies the market expects a massive 39.9% non-GAAP net income compound annual growth rate over the next 10 years.
Almost 40% net income growth every single year for a decade.
Yeah.
I mean, that means the market is demanding sustained 25% plus revenue growth combined with really aggressive margin expansion up to 30% or more.
It does. And if you look at the multiples, Cloudflare is trading at a 177 forward PE and an enterprise value to revenue multiple of 28.
Which is wild because peers like Datadog trade at, 18 times EV to revenue?
Right, and Zscaler is at just 11 times. So Cloudflare is priced for absolute perfection right now. There's zero room for execution errors.
Okay, so to sum up the long-term investment story here, Cloudflare is successfully transitioning from a basic CDN into the critical toll booth for non-human agentic internet traffic.
That's the narrative, yes.
Which leads to the final echo for you to take away today. This 20% layoff is not a sign of operational distress.
No, not at all.
Right. It's a mandatory proactive margin expansion tactic to financially justify that astronomically high valuation.
Completely agree.
But I do want to leave you with one final thought. If Cloudflare is betting its entire $79 billion valuation on being the toll booth for AI agents, what happens if the broader AI boom slows down? They are making a massive, irreversible bet on a very specific future, and they are priced for perfection.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.